All right, everybody, we're going to get started. We got started a little bit late. Huh? It isn't? It is? Is that better? Like that? It's better? I think we need to close the doors. Could people help me out and close the doors a little bit? Thank you. Okay, my name is Elise Bean. I worked for Senator Carl Levin for 30 years, doing investigations for him in the U.S. Senate. He retired in 2015, and I did too, and wrote a book about all the investigations that he did. And sort of the point of this talk is to show you how some of those investigations led to some of the anti-money laundering laws in the United States. So Carl Levin was a Michigan senator. He was in the Senate for 36 years. That whole time he did oversight. He liked to do investigations. He spent the last 15 years at the Permanent Subcommittee on Investigations. So we call it PSI. It was a subcommittee that got its origins with Harry Truman when he was in the Senate during World War II. He was looking into war profiteering. He did such a good job. It was so bipartisan, so fact-based. He got so much done. They decided to make the subcommittee permanent. That's why we have our weird name. Back then, when a subcommittee did an investigation, when it was done, it disappeared. But they decided they wanted a permanent subcommittee in order to get a cadre of people that knew how to do investigations. They have very broad jurisdiction. Essentially, they can look at anything. They're known for having year-long investigations and for being bipartisan and for being very fact-based. The other good thing about PSI is they like to name names. So all of our investigations had case histories, and we named the people involved. Congress, its authority to investigate, there's nothing in the Constitution about it, but the Supreme Court has decided it's inherent in the legislative process. If you're going to legislate, if you're going to nominate, appropriate money, wouldn't it be a good idea to get the facts? And so Congress has broad authority to do investigations. What I'm going to do is give you 4 different examples and just sort of run through them. It's a pretty sophisticated crowd, so I'm going to go pretty fast. If I'm going too fast, feel free to slow me down. I should say that during Senator Levin's 15 years in PSI, he worked with 4 different Republicans. These are the Republicans he worked with on different types of investigations. The one thing about them, they're all kind of mavericks. They cared more about the facts than party. They all actually wanted to know what happened, and that's why they were able to have such successful partnerships at PSI. So the very first investigation Senator Levin did when he joined PSI, he was in the minority at that time, but PSI allowed minority-led investigations. And there was a big scandal in the papers about Raul Salinas, who was then the brother of the president of Mexico. And he had been arrested for suspicion of murdering his brother-in-law, who was a prominent politician in Mexico. And then his wife was stopped at a bank in Switzerland, and it was an account that had $85 million. And then there were rumors that Citibank, private bank, also had accounts for Mr. Salinas. So we decided to investigate. And we decided to broaden it not just to the individual of Raul Salinas, but to the whole idea of private banks having money laundering vulnerabilities. So private banks we defined as banks that had a certain minimum amount of money that you had to have before you could open an account. Back then it was $1 million. These days it's more like $5 million. In addition, you have a liaison, a private banker or relationship manager within the bank that would help you out. And they would help you navigate the systems. We also found out that the Federal Reserve had become so concerned about money laundering through private banks, they had done their own audit program. They had done 40 different audits of private banks. And we also found out that the only bank they had audited 3 years in a row was Citibank Private Bank. So one of the first things we did was get access to the Federal Reserve's documents and audits and work papers when they did those audits. That was a pretty amazing set of documents because they had found serious problems at Citibank. They had tested a number of different accounts, and they were really quite concerned about what was going on in Citibank Private Bank. We also had the luck at the time that a Citibank private banker had been arrested for embezzlement and was in jail. We located him. He was in upstate New York. We went out to meet with him. We spent about 2 hours with him. Citibank had been very secretive about its private bank, but this private banker, we got him out of KP duty, talked to him for 3 hours, and he gave us the entire lay of the land. How the bank was organized, what the paper flow was, who the supervisors were, how they actually really did due diligence or didn't do it, the attitude within the bank, all of this information that we needed. So he told us how the place operated. The Federal Reserve had a lot of paperwork, and we were able to develop actually 4 case histories at the time. So I'm going to just give you a little bit of a story about each one of these 4 case histories so you can see the kind of things that we found out. So Raul Salinas, we found out, it had a special arrangement to get his money out of Mexico. The private banker he worked with at Citibank was called Amy Elliott, and she set up this system where his girlfriend at the time would go into Citibank Bank, their flagship bank in Mexico City. She would bring in cashier's checks from other banks, so they just had the name of the bank on it, no individual. She would talk to the manager of the Mexico bank and say, here's a deposit, can you please take care of it for me? He would then deposit it in the account of Citibank Private Bank itself, their concentration account, so not any client account, and they would put it to the attention of the private banker, Amy Elliott. She'd see this money come in. She would then forward it to accounts in Switzerland and London that had been opened in the name of a shell company called Troca. So the people in Mexico didn't know it was going to the Troca accounts, and the people who got the money in the Troca accounts didn't know where the money had come from. So they had this whole arrangement that really broke up the auditing capability to follow that money. So we really found this was not a case of a bank being hoodwinked or being taken advantage of. This was a bank that was very aggressively helping its clients. We also looked at the other 3 accounts. We identified them from the work that the Federal Reserve had done. Omar Bongo, president of Gabon. What we found out is that he had an extensive relationship with Citibank Private Bank. He had about $130 million in a whole bunch of different accounts in Gabon, Switzerland, the Cayman Islands, the United States, and we found that they had helped him move the money. They had also used his money offshore in order as collateral to give him loans. They loaned him as much as $50 million just before his re-election campaign. When the bank regulators began to press Citibank, well, where did this $130 million come from? We found later internal documents, emails, where they're scrambling to explain where the money came from. All their KYC said is self-made man in a country that does a lot of oil deals. Well, what does that tell you? So he couldn't explain it by family money. He got it once he was in office. Eventually what Citibank did is they manufactured a 1-page memo saying that they had talked to senior Gabon officials, and those senior officials said, well, the country gives the president money that he could do with at his discretion, and his discretion extended so far that he could put it into offshore accounts in his personal name. And they gave him $111 million 1 year. Well, the bank examiner from the OCC said, okay, that's good enough for me. Okay, well, it wasn't good enough for us. We went to the World Bank and the IMF and said, is this true? Does the country budget $111 million, an equivalent amount every year for the president? They said, absolutely not. All of their money is accounted for. He gets a salary of about $100,000. There's no way he's getting over $100 million a year to put in his private bank accounts. And yet Citibank had transfers from Gabon's treasury, other kinds of money coming into his account. So you have to ask yourself, well, were they wrong that the government was giving the money? Was he actually taking it? Was he not telling the IMF and the World Bank? They actually, the IMF at that time had put a freeze on their accounts because there had been irregular accounting that they were looking into. But that was the story of Mr. Bongo. Mr. Zardari is the husband of Benazir Bhutto at the time. We found that he had a number of accounts in the name of shell companies. Let me see, I can't remember them. I'm behind here. MS Capricorn Trading, he had one called Marvel, another one called Boehmer Finance. He had a bunch of accounts at Citibank in Switzerland. They had about $40 million flowing through those accounts that we saw in very, very strange money patterns. And sort of the most fun fact about his account is that one day, Benazir Bhutto showed up at our offices, all by herself, no attorney, no representative. She said, "I hear you're looking at my husband's accounts." We invited her in. She sat down on our couch. My boss and I explained to her, we laid it all out, what we had found, and we said, "Do you have any explanation for this $40 million? She said, "Oh yes, there's nothing suspicious about it. I will get you the documentation." She left. We never heard from her again. It was just kind of an interesting thing that happened along the way. Our fourth account, we looked at Sani Abacha's sons, who had a number of accounts at Citibank in New York and London primarily. They had about $110 million. After Sani Abacha died unexpectedly, they caught his wife at the airport with, I think it was over 30 suitcases stuffed with various kinds of currency, and they caught his son with millions of dollars in cash. What we found interesting is that Citibank, after there had been a worldwide call for trying to find money that Sani Abacha had taken from the country, and they were asking financial institutions to tell the government in Nigeria about his money, what we found that Citibank did is the sons went to them and said, "We really have a need to move $39 million out of our account, but the problem is we've invested it, and if we just pull it out, we'll have to pay a financial penalty." Citibank ran to the rescue. They said, "We will allow you to take a $39 million overdraft on your account so you can move the money, and then when the financial instruments mature, then we'll cash those in for you and pay off your overdraft. That way you don't have to pay any penalty." Again, this is not a bank that is a victim. This is a bank that was actively helping suspicious money move through its accounts. Okay, let's see. So we had a big hearing. We had John Reed, who was the CEO of Citibank, Citibank as a whole at the time. He did not fight the facts. He admitted them. He said they needed to clean up the private bank. He also pointed out that what they had done was not actually a crime, because back then, if all of the corrupt acts that gave rise to these proceeds happened outside of the United States, that did not give rise to a money laundering prosecution within the United States. So he said, we didn't actually break the law, but we still shouldn't have been doing it, and we're going to clean up our private bank. He actually closed all of the accounts that we profiled. He caused a bank-wide review of all of their accounts. They actually took a tape of their private bankers who had been grilled at the hearing, and they showed them to all of their private bankers around the world saying, "Don't put yourself or us in this position again." They had to do that because their private bankers simply did not believe that the bank wanted them to stop doing business with suspicious money. And they actually had a very intensive campaign for 2 years trying to convince their own employees not to engage in suspicious transactions. We broadened this to other private banks as well, and most of them scrubbed their banking accounts, looking at political figures in particular to see what kind of money they had and what kind of transactions were going on. And the regulators at the time also beefed up their efforts with respect to private banks. So that all happened in 1999. It took us about a year to do the investigation. We had the hearing, we had a report. Senator Levin enjoyed that investigation so much, he had never done a money laundering investigation before. He said, "I want to do another one." Well, at that time, there was a big scandal. Bank of New York, $7 billion had gone through their correspondent accounts. And Senator Levin said, "Well, what are correspondent accounts?" And we explained to them those are simply accounts opened by a bank for another bank. And at the time, the attitude was, a bank is a bank is a bank. If it has a license, it must be okay. We can open up an account for them, and we don't have to look at it because these are regulated entities within their countries. And the conclusion of our investigation was not all banks are the same. Some require more oversight than others, and there's a lot of suspicious activities that go through banks. So we did two-part investigation. First of all, we did a survey of 10 U.S. banks and 10 foreign banks that were operating in the United States, looking at their correspondent banking portfolios. And we found that this was big business. One U.S. bank had 3,800 accounts, a foreign bank had 12,000 foreign accounts. And they were wiring this, up to $1 trillion per day. So this was a sleepy part of the bank. It wasn't considered high risk, and yet there was a lot of money involved. We then decided we were going to have to look at particular case histories, and we were wondering, how are we going to do this? Well, my colleague Bob Roach had the brilliant idea of let's go to the Department of Justice and ask them for closed money laundering cases where there were little no-name banks that had moved suspicious money. They had already decided that those banks were engaged in wrongdoing, and let's start from there. So we called up the Department of Justice, and they gave us a smorgasbord of banks to choose from, very strange little banks. We eventually focused on 10 of them and wrote up those case histories. They included shell banks. When I say offshore banks, those are banks that were licensed by a jurisdiction but not allowed to do business within the licensing jurisdiction. They could only do business outside of that country. We had banks in non-cooperative jurisdictions that weren't cooperating with the rest of the world in anti-money laundering investigations, and we looked at nested banks. So I'd like to give you a couple of examples. Again, I have to catch up with my things here. Okay. So one of the banks we looked at was called Hanover Bank. It had been licensed by Antigua Barbuda. It was owned by an Irishman named Tony Fitzpatrick. He didn't actually appear on any of the papers setting up the bank. He used people from Antigua itself, he said, because that made it easier to open up the bank, but he actually supplied the money from the very beginning, was the sole owner, and I suppose you can call him the sole employee. As he said to us, he wasn't really a banker, he just kind of did it by the seat of his pants, and he had never been subjected to a bank examination anywhere, and he said the bank operated wherever he was. It didn't have a physical presence. It's just wherever he had a suitcase with the papers for those banks, that's kind of where the bank was. And we'd become interested in that bank because we had looked at a case where a guy named William Coop, he was in his 60s, he had sold swimming pools for his career. Then he retired and decided to get into selling financial instruments to retired people across the United States. It was a big fraud. He had these people send money to him through certain correspondent accounts, so it totaled about $5 million. What he had them do is he had them send the money to Harris Bank International, which was a bank in New York, to a correspondent account opened for Standard Bank of Jersey, to the attention of Hanover Bank, which had an account at Standard Bank. So we had the shell company bank at Standard Bank, which was a real bank, which then had the account at the U.S. Bank. The U.S. Bank, Harris Bank, said they had no idea that they were moving money for Hanover Bank. They had never heard of them and didn't realize they were nested within Standard Bank that they were doing business with. When we asked Standard Bank about opening an account for Hanover, they declined to talk to us. We were able to trace these transactions. William Coop had pleaded guilty and told us all about this transaction. He said, well, the guy he dealt with was a guy named Terry Wingrove. Well, it turned out Terry Wingrove had been arrested and was awaiting extradition back to the United States in connection with the same anti-money laundering financial fraud case. So we went to see him in prison in London. He was at Wormwood Scrubs Prison, which I'm sure he thought it was awful, but to a United States person, it was in the suburbs of London. You could get there by a subway. It was it had statues of different people on it. When you went inside, it had robin egg blue walls and these rather overweight guards with like Dickens keys, from Charles Dickens. And they took us into a little room, and there was Mr. Wingrove. And he had been sitting in that prison for 5 months, fighting this extradition. Nobody had seen him. Nobody had come to talk to him. We were the first people he had talked to outside of the prison in 5 months. We asked him a few questions, and he was off to the races. He explained the whole thing to us. His story was that he was an art dealer. He knew this money was coming in from William Coop, from his arrangements with these individual people that were sending money from across the country. He took that money and he used the same correspondent accounts from Hanover Bank to Standard Bank to Harris Bank to move the money out to art houses and art locations around the world where he bought art with it. This was his story. So it was a very interesting sort of situation, and he said he dealt with Tony Fitzpatrick, who was the owner of the bank. We asked Tony, we said, well, how many clients do you have in your bank? You have all this money coming in from all these disparate persons. How did you know it was supposed to go into, you know, this one particular account for William Coop? And he's like, well, I've only got 5 clients, and the other ones weren't really doing anything, so I knew all that money, you know, just went to them. You know, never been examined, had no procedures, had no anti-money laundering program. That's how that bank was operating. I'll give you one other example. I don't want to take up too much time. There was a bank we looked at called MA Bank. It was licensed in the Cayman Islands. It was a shell bank as well, had no physical presence anywhere. It was never examined by any bank examiner anywhere. It was affiliated with a securities firm called Mercado Abierto Group in Argentina, and it operated out of the security firm in Argentina. We found out that, just like the other bank, it had no procedures, it had no anti-money laundering program, it didn't really seem to have any real employees. They were all employees from the securities firm, and we found out that they engaged a lot of very strange transactions. People had no actual accounts would show up and ask for money, and they would allow them to take withdrawals. They printed up phony receipts. Any kind of receipt anybody wanted for, they would produce. And they had sent a total of about $1.8 billion through their correspondent account at Citibank in New York. That included $7.7 million in sting money from a drug operation that U.S. law enforcement had been operating. It turned out that the bank was owned by 3 former Argentine officials, and it was all very mysterious. So these are the kinds of banks that are opening up accounts in the United States. So we ended up with 10 different examples of this. As far as I know, it's the only write-up of its type that went into shell banks. What did they actually do? And we had several other kinds of banks as well. What did they actually do with their U.S. correspondent accounts? And what we found out is that they were essentially gateways for suspicious transactions, money to flow through the United States. So that was the investigation we did. We had a hearing. It was very interesting. A lot of these people would just talk to us on the phone. We thought Tony Fitzpatrick would never talk to us about Hanover Bank, but he was a very glib guy. He seemed to think he could talk his way out of anything, and so he did an interview with us for about 4 hours, and we got great level of detail. As a result of our hearing, we ended up having our hearing. We featured 2 different banks, shell banks in Argentina. We actually got more press in Argentina than we did in the United States. Big news in Argentina. But we had a big impact from that hearing. All of the U.S. banks closed all of the accounts that we had profiled, and in addition, they scrubbed their correspondent portfolios. For the first time, they're saying, all right, not banks, all banks are the same. Some are higher risk than others, and we should do some due diligence on the ones that are higher risk. In addition, the Bahamas and the Caymans shut down over 60 shell banks each. As we said to them, why do you have these shell banks? There's no employment there. Why don't you require any bank that opens up an account in your jurisdiction to at least have one job in your jurisdiction and to keep their records within your jurisdiction? Because when we were trying to look at Hanover Bank, you know, if Antigua wanted to look at them, there were no records to look at. There was nothing actually in Antigua. So we had a lot of great cooperation with jurisdictions that had been doing shell banks to say, you know, enough was enough. They didn't really want to do it anymore. As a result of this, I don't know why that's covered up like that, but we ended up passing Title III of the PATRIOT Act. So we'd been trying after each one of these investigations, the one in 1999, the correspondent bank investigation was in 2001, we introduced legislation to cure some of the problems that we had identified. But we couldn't get anybody paying attention to us. Phil Graham was the chairman of the Senate Banking Committee at the time. He had a lot of banks that did business with Mexico. They didn't want to ask questions about where the money was coming from, and he just deep-sixed our bill. But then there was a change in status. The Democrats became in the majority party, and then we had the 9/11 attack. And all of a sudden, people wanted to do something about increasing our safeguards in our financial institutions. At that time, Senator Sarbanes from Maryland had become the chairman of the Banking Committee, and instead of deep-sixing our bills, he had actually been a co-sponsor. So he took our bill, he beefed it up further, and that became that big moment in 2001 where we really strengthened our anti-money laundering laws. So, for example, a Sarbanes provision, all U.S. financial institutions must have anti-money laundering programs. They all must file SARs. Some exceptions have been made to that rule since then, all very bad ideas. We're still trying to get those exceptions, gotten rid of them, but that was the basic provision in the law. For the first time, foreign corruption proceeds could trigger a U.S. anti-money laundering prosecution. So the thing that wasn't illegal when Citibank was doing it finally became illegal. We required U.S. banks to do due diligence before opening accounts for politically exposed persons or for offshore banks. And we banned shell banks from opening up accounts at U.S. banks. And we not only said a shell bank can't open an account directly, but in addition, a U.S. bank had to make sure that any bank they opened up an account for did not open up accounts for shell banks to get rid of that nesting problem. After a couple years, FATF made it a worldwide anti-money laundering standard as well, and shell banks have essentially disappeared from the world because of those prohibitions. So that was my first example for you about the kinds of investigations that Levin did in this great detail in an area that people had not really looked into that kind of detail before, and he was able to get legislation passed. A couple years later, in 2004, we had passed this law, and we said, gee, we wonder if anybody's actually enforcing the changes in the law. And we decided to look at Riggs Bank, which was a $4 billion bank in Washington, D.C. that specialized in catering to embassies and foreign officials. Well, surprise, surprise, we found big problems. These are the two accounts that we featured. Mr. Obiang was the president of Equatorial Guinea, and we looked at him, and what we found is that Equatorial Guinea had 60 accounts at Riggs Bank, including what they called an oil account. And at that time, it was mostly U.S. oil companies that were operating in Equatorial Guinea. And they were paying their royalties, which was all legitimate money. None of this was suspicious money. But they asked them to deposit the money in this account at Riggs Bank. And it was kind of a big secret. Nobody in Equatorial Guinea, or I think anybody else other than Riggs, knew that all this money was going into Riggs Bank, and the account fluctuated between $400 and $700 million at a time. They turned out to be the largest client at Riggs Bank. In addition, a lot of those accounts had been opened by officials from Equatorial Guinea, including the president himself. And in fact, Riggs set up an account for him called Otong. It was a shell company. And we traced instances where they were bringing in large amounts of cash to deposit in that account. We had two instances where somebody brought a duffel bag full of cash, gave it to their private banker at the time, Simon Carreri, and he had the money counted and deposited it into the account. That was $3 million on two different occasions, and he brought that money in. It was all shrink-wrapped in plastic, and they tore open the plastic and counted the money. We asked him, where did he think that money had come from, that it was shrink-wrapped like that? He said, I think he sold some property in France. Okay. So we saw a lot of other different kinds of suspicious money as well. For Mr. Pinochet, we got whispers once we started looking at the Riggs accounts that there was accounts open for Mr. Pinochet, who was the president of Chile, the former president of Chile, and was still a member of their Senate. What Riggs started to tell us originally is that Mr. Carreri was a fine, upstanding banker. Then when it turned out, as we began to press more on the Equatorial Guinea accounts, all of a sudden one day he disappeared and showed up in Equatorial Guinea. So that's when then they decided, okay, he was the bad apple, and that was the reason there were troubles in the bank. But when we looked at the Pinochet accounts, they had nothing to do with Mr. Carreri, who handled only accounts for Africans. Instead, they had a Latin American crew. And again, we found highly suspicious transactions going on. Among other things, Mr. Pinochet had been put under house detention in London They were trying to go after him for a lot of disappearances of people in his country, and he was being sued by a magistrate in Spain. They put a worldwide freeze on his financial accounts. Despite that worldwide asset freeze, that was a court order, Riggs Bank, which had a branch in London, they had $1.6 million in that account for him. They simply transferred it to the United States and put it in accounts for shell companies that they had set up for Mr. Pinochet, Althorpe and Ashburton. So this, again, is not a bank that was a victim, but actively helping somebody move money when it's against a court order. We also found out that they ended up doing 38 cashier's checks that they would send to Mr. Pinochet in Chile. So the cashier's check would simply say, this is money from Riggs Bank. No mention of him, no mention of his accounts. The first time they flew a bunch of these accounts, these cashier's checks, they had his private banker take it to him personally. After that, they just sent them by FedEx. And he would take the cashier's checks, he would go into a major bank in Chile, they would see the cashier's check, they would cash it for him, he would then take the cash, go on the black market, and change it into pesos. And they moved about $1.9 million for him through 38 different cashier's checks. So again, we're finding a bank, not a victim, a very active entity that's helping their clients move suspicious money with virtually no questions asked. Once we had this investigation, we also found out that that the person who was the bank examiner for the OCC, who oversaw Riggs, he had been at the OCC for 30 years, he retired, and guess what? Where do you think he showed up? Riggs Bank. He became their chief risk officer, making a bunch of money at Riggs Bank. So he had been their bank examiner, all of a sudden he was one of their executives. As a result of this investigation, we got a bunch of reforms. First of all, Riggs Bank cleaned up. They closed those accounts and a bunch of others as well. They paid some big fines. The banker, Simon Carreri, ended up going to jail. It turned out he had been getting payoffs, he and his wife. The owners of the bank, the Albritons, actually sold the bank to PNC, and after more than 100 years, the Riggs name just disappeared from the banking scene in the United States. In addition, we got a law passed saying that a bank examiner cannot take a job with a bank he was examining for at least 1 year. He had a 1-year cooling off period. That is now the only law that I know of on the books where a regulator, a federal regulator, has to have a cooling off period before they work for somebody that they were overseeing. We also, in addition to that, all the agencies, the federal banking agencies said, gee, we haven't really implemented the 2001 law. We haven't really done the regs for that. They all then passed the regs within the next year or two. So that's example number 2, where we got that law. Third case history. This has to do with hidden bank accounts, and it really happened because we had a couple whistleblowers walk through the door. We had a guy from Liechtenstein who had been hired by LGT, which is a bank owned by the royal family in Liechtenstein, one of their bigger financial institutions. He was not a banker. He had been hired as an IT specialist to make it a paperless office. So he's making it a paperless office, but as he does, he becomes outraged with the people he sees getting accounts. He thinks they're crooks and dictators and people hiding their money. So what does he do? He makes a full copy of all the documents that he turned into the paperless office. He then went on a systematic basis to a dozen different countries selling the information to them. He went to Germany and says, I know about a bunch of accounts from your nationals at LGT. I'll sell them to you. And Germany bought them for $5 million. He came to the United States, went to the IRS. As we all know, the IRS doesn't pay you up front, but if you give them information and they get taxes later, they'll give you a cut. So he came to the United States, and he had a lawyer with him that we valued and trusted, and he got that lawyer, the lawyer got him to also come to the Permanent Subcommittee on Investigations, to PSI, and says, you know, you ought to tell your story to them as well. So he came to us, and he gave us, I think, the same documents he gave the IRS. And they were documents on about 150 different Americans with accounts at that bank that had never been reported to the IRS. Well, these documents are so hot, they were burning our fingers, right? But there were a couple problems. First of all, they were in German, Liechtenstein German. with all kinds of slang and technical terms in it. That was our first problem. Went around the office. Anybody speak German? Anybody take German in college? 2 people had. They were able to translate enough, so we identified about a dozen really good accounts with a lot of money and looked like they had juicy facts. We then went to the IRS and said, you know, IRS, we're going to translate these documents, but we bet you're doing the same thing. Do you really want to have 2 translations of these documents, or do you think maybe we should just have 1? Eventually, in a very narrow group of documents, they gave us their translations so that there would not be 2 different forms of it floating around. We then used those translations to go after a bunch of account holders in the United States. Everyone we contacted had already been contacted by the IRS. They were already all lawyered up. They confirmed they had these accounts. We asked them further questions about them. Just give you one example, there's a guy named Marsh. He was a construction contractor in Florida. He had gone to Liechtenstein. He had 4 different foundations, they called them, and opened up accounts. He had $49 million in these accounts by the time we caught up with it. He had actually died a few months before the IRS found out about all of this. His sons had claimed they didn't know anything about it, but guess what? Those documents from the bank, they had all been out there. They had signed documents about how they were going to oversee the accounts and direct the investment and all the rest of it. So we had them and a bunch of other people as well from all wonderful stories, but I can't do everything. So anyway, we ended up having a hearing with Liechtenstein. But at the same time, 4 months after that first whistleblower walked through our door, we got a second guy named Bradley Birkenfeld from UBS. He was a banker. He had been born and raised in Boston, sent to school in Switzerland. He liked it so much he went into the banking industry there. He worked for a number of different banks. He ended up with UBS, left them in UBS Private Bank, left them on less than amiable terms, and he decided he was going to get them, and he came to the United States and gave an entire story to the Department of Justice. He also came to PSI and said, I'd like to tell you the same story, but you need to give me a subpoena. I can't do it voluntarily. Gave him a friendly subpoena. We had a 6-7 hour deposition with him, and he told us the whole story. And to boil it down, because this took a lot of time and work to confirm his facts, but it turned out that UBS had 52,000 accounts for US persons in Switzerland that had never been declared to the IRS, with a total of about $20 billion in them. Not only that, but UBS had been regularly sending its bankers to the United States, often on a tourist visa, and would send them to yachting races and art venues and other sorts of expensive places where rich people went, and they would quietly go around the crowd and hand out their card, by the way, if you'd ever like to open up a Swiss bank account, here's my number and I can help you out. So this was not people going to Switzerland. These were Swiss bankers sneaking around the United States on US soil, getting clients for their bank. When it came time for the hearings, we had a hearing that combined these 2 banks. This was in 2008. We told UBS, you know, you have a big presence in the United States. You have 4 million customers here. But none of you really did any of this stuff. It's really your colleagues in Switzerland that did all this. You really ought to send us somebody from Switzerland. And they did. So on the day of the hearing, we had never talked to this gentleman who came as the witness, but he was right out of Central Casting. He had the $2,000 suit, and his hair was perfect, and his English was perfect, and he got up there, and the first thing he did was he admitted everything and apologized. He said, you know, I'm sorry for this, and we're never going to do it again. I was so taken aback, I almost fell off my chair. We had no indication that UBS was going to do that. I sent Senator Levin a little note, wow. But of course we're on TV, so we have the stone face. He takes all of the questions, very tough questions he had, and he put them to the side, and he said, what exactly are you sorry for, and what exactly are you never going to do again? And UBS explained, and you know, he had him do it 6 ways to Sunday, that they would no longer ever open up an account for a US person without telling the IRS, and they were in fact going to turn over a bunch of names to the Department of Justice. Now, the reason they did all this was not because of us, but because the Department of Justice had a parallel criminal investigation going on. It was right near the end, and I guess UBS felt they might as well come forward with it because it was all going to become public anyway. They did have a deferred prosecution agreement. They paid a fine of $780 million. They turned over about 250 names at the beginning. By the end of it, it was about 4,500 names, which to me was not very much, 4,500 out of 52,000. But at the time, it was seen as the first time that Swiss secrecy had ever really been cracked open. And it was an earthquake in the offshore world when Switzerland came forward. And also Liechtenstein followed and said, we're no longer going to open up accounts for U.S. persons without telling the IRS. We're no longer going to use bank secrecy as an excuse to help people with tax evasion. And this then became a big movement with the OECD had, in the end, about 90 countries sign up to their standards for exchanging information on bank accounts on a case-by-case basis. So when all of that happened, we went to Credit Suisse and said, so are you doing it too? And they're like, yes, we are. And we said, well, we're not going to have another hearing. We think we sort of made our points. Just clean up your act and, don't do it anymore. And we're going to close these accounts. We're going to clean up our act. But we found out several years later that they had not closed the accounts. Gee, they just never quite got around to it. And in fact, we heard that they had left open a lot of these accounts. So we ended up going after them as well. We had a hearing in 2014 for them. They had about 22,000 accounts in Switzerland for U.S. persons never declared to the IRS, with about $12 billion in those accounts. And we found one guy who'd opened an account there, and he had fun stories. They invited him to come to Zurich. He went there. He went to their headquarters. He was put in an elevator with no buttons, goes up to a floor, it opens up, everything's white. He's brought into a room, everything's white. They're selling secrecy. That's what they're doing. After he opened up an account, they told him they'd always shred the documents and he'd never get anything in the mail. His banker would show up every few months in the United States, invite him to an expensive breakfast. He'd pass him a Sports Illustrated magazine and he'd open it up and there was his bank account statement, not his name on it, but he could see what he had invested and all of that. That's what Credit Suisse was doing. Credit Suisse tried to blame it on a few rogue bankers. The bank employees union said, are you kidding me? And they actually put out a statement saying this was bank policy. They made a lot of money off it. It was not rogue bankers. So that was our hidden bank accounts. We also, just on another, because we like the hidden bank account thing, we went after these two brothers from Texas, Sam and Charles Wiley. They were legitimate businessmen. They had made a lot of money, publicly traded companies. They were rich. But they just didn't want to pay taxes on the money they had made. So we found out that they did this very complicated offshore structure. Over a 13-year period, they had set up 58 trusts and offshore corporations. They had moved $190 million worth of stock options to these offshore entities through Nevada, very complicated. They ended up then directing these offshore entities. They were mostly in the Isle of Man. They had 5 different trust companies running these different trusts and their offshore corporations that were owned by the trusts. And they would, on a, almost a daily basis, certainly several times a week, they would instruct the trustees on what to do with these shell companies. They said, we want you to exercise the stock option, get the stock and sell it, and then do X with the money, or we want you to get the stock and put it as collateral for a loan. These trustees were not these brilliant businessmen. It was the Wiley brothers. And they parlayed that $190 million into $700 million by the time we caught up with them. And they had all different kinds of things. Real estate in the United States. They had 2 hedge funds. They had a private equity fund. They bought expensive jewelry and art. They tried to tell us they were making art investments. And we found out they had spent $800,000 on art, but they were all portraits of the family members. And we're like, don't tell us that's an art investment. You're just spending your money in the ways that you liked. Eventually they were, so we had a whole hearing with them, their attorneys, talking about this offshore structure. As a result of all of those hearings, we had different kinds of enforcement actions. I told you about how UBS paid the $780 million. Credit Suisse actually had less accounts and less money, but by 2014, the tolerance was much lower. They ended up getting a fine of $2.6 billion. They did end up closing all those accounts. The Wileys were eventually prosecuted not for tax evasion, which was sort of the motivation, but for securities fraud, for exercising control over these offshore entities but pretending they were independent entities. They were fined $300 million by court. They decided to get cute, and they went to bankruptcy court, declared bankruptcy, even though they had been on the list of the 400 Forbes richest men in America. And once they went to bankruptcy court, you know what happens there? Who's first in line? The IRS. The IRS said, you know, we never went after you before, but you're going to come in bankruptcy court? Well, now you've already proved securities fraud. You've proven in this other trial you did it for tax evasion reasons. We're not going to hit you for 13, going back to the 1990s, all the taxes you should have paid, plus interest, plus penalties. They hit him with $1 billion, actually went after him for $3 billion. The court reduced it to $1 billion. And the brothers continue to fight it to this day. One actually has died since, but his estate is still fighting it. So those are the enforcement actions, but we don't actually do these things for enforcement actions. We do them for policy reasons. And we actually got a big policy passed, FATCA, which I think of as Fat Cat without the T, but the Foreign Account Tax Compliance Act. And what it was is this. So we had had all of these hearings, multiple hearings about people at secret bank accounts that weren't being reported to the IRS. And a lot of the banks had obligations to report them through the QI system, but they didn't do it anyway. So the head of finance and the head of Ways and Means got together, they introduced this bill, and it said, every foreign financial institution around the world has to report any account opened by a U.S. person to the IRS, and if you don't, and if we find out, we're going to slap you, foreign financial institution, with a 30% excise tax on your U.S. earnings. And since most foreign financial institutions had treasuries or U.S. stocks and bonds, it was not an empty threat. It was a very powerful threat. So as we all know, FATCA started to unfold around the world. We started to get these international agreements. But then the foreign banks and the foreign governments said, wait a minute, we're setting up this whole infrastructure to report banks to the IRS. Well, U.S., how about you report your banks to us? All of our guys are cheating with secret accounts in your banks. We want to exchange information. IRS said, you're right. And so we passed a U.S. regulation requiring all U.S. banks for the first time to report on all accounts opened by foreigners. In the United States, it used to be only U.S. persons got reported to the IRS. Anybody who wasn't a U.S. person or claimed they weren't a non-U.S. person, including shell companies, didn't get reported to the IRS. Well, now all of them get reported to the IRS, and there's an exchange of information. But then the rest of the world went even further, and they said, forget about the U.S. What about us? What about those accounts in Liechtenstein for German nationals or accounts in Spain for people in Italy? How about all of us exchange bank account information? And they set up their own FATCA-style system. So all this is very new. The worldwide systems just began disclosures in 2017. The FATCA began disclosures in 2016. So we've really had about 2 years of actually exchanging bank account data. So all of those hearings that Levin did has actually had a big impact in terms of transparency. Now that bank account information currently can only be seen by the tax authorities. They're kept confidential. But one of the issues is, shouldn't law enforcement get to see them as well? Don't make them public, it's private bank account information. But what about money laundering? What about drug trafficking? What about all the financial fraud? Shouldn't our law enforcement get to see this database as well? Okay, last example. So in addition to going after individuals, Levin decided he wanted to go after multinational corporations. We held him off for several years, none of us being international corporate tax experts. We didn't know anything about it. We didn't want to know anything about it. But he insisted. Finally said, drop everything you're doing. We're going after the multinationals. So for 3 years, we had a series of hearings by multinationals. Our most famous had to do with Apple. So to make a long story short, this is what we found out. Apple had set up 3 shell companies in Ireland. On top is Apple Operations International, which owned Apple Operations Europe, which owned Apple Sales International. Apple created its phone and all of its good stuff in the United States. They kept the patents in the United States because they want the U.S. laws to protect them. God forbid they should pay for it, but they want the protection of the US laws. But they sold the right to market these products outside of the United States, outside of North and South America, to Apple Sales International. So what happened then is, let's say you have an Apple store in Germany or Vietnam or Kenya. They would make their sales, but then they'd have to pay a royalty payment to Apple Sales International in Ireland. And gee, it's just funny how they would set that royalty payment just at the right amount. So in Germany, they would say, yeah, I sold $1 billion worth of phones, but I don't have any profits because I had to make this huge payment. Those guys made me make a big royalty payment. So I don't have any taxes in Germany. I'm sending all the money to Ireland. And what we found out is over a 4-year period, they had sent $74 billion of sales income to Ireland. And then what did we find out? Apple had found what they thought was a quirk in the law, so that none of these 3 shell entities had tax residency anywhere. The way they did it, in the United States, we say, we'll tax you as a corporation if you're formed here. Well, these entities were formed in Ireland. But Ireland had a law that says we're only going to tax you if you're managed and controlled from Ireland. They didn't have any employees. Everybody was all managed and controlled from the United States. So Apple said, nothing in the US, nothing in Ireland. They're not tax resident anywhere. They didn't tell anybody that until we found out. And the way we found out, we had sent them a questionnaire saying, identify all of your offshore entities, tell us where they were formed, where they're tax resident, and sort of their basic, what they do. And they gave us a big list, and they had all the information, but there were 3 blanks when it came to these tax residency things for these guys. We thought it was just an oversight. We said, oh, you left these blank. Where are they tax resident? And they're looking at the ceiling, and they're looking at their toes, and they finally say, well, they don't have a tax residency anywhere. And that's when we knew that would be our next hearing. Took another 6 months to really get down all the facts. They were very complex in their explanations, and as you all know, we pay all the taxes we owe. Well, do they? In the United States, we would have said these are all shell entities, and therefore all of that money should be attributed to the parent company in the United States, should have been taxed here. The IRS had never actually taken that position. I don't know why. My supposition is they felt nobody would back them up. Everybody was too chicken to actually go after Apple. But luckily, not everybody is chicken. So as you probably know, the European Commission has a competition office, and they said, wait a minute, Ireland, we hate you anyway, because your tax rate is 12.5% compared to all of our other European countries, so you're attracting all these people with this very low tax rate, but now we find out you didn't even bother to charge that to Apple. And in fact, when we found out, 1 year they charged them 0.05%. Not 0, but pretty darn close. So they went back 10 years, which is as far back as they could go under their rules, and they said, we're going to figure out all of the taxes you should have paid Ireland over that time, plus interest, and guess what? It's $14 billion, and you need to pay up. And by the way, the United States, if you think any of this money should go to you instead of Ireland, just let us know. U.S. hasn't claimed any of that money. So they forced Apple to put the money in escrow. Of course, they give them a guaranteed return while it's in escrow, but that's another outrage we won't get into. But they put the money in escrow, and both Apple and Ireland are appealing the decision. Because Ireland has a bunch of sweetheart deals with corporations that nobody knew about, and they want to be able to preserve those sweetheart deals. I think, personally, I have no evidence for it, but I think Ireland was shocked to find out that Apple had sent $74 billion to those Irish subsidiaries. They took out of that $74 billion, they sent $30 billion up to the top guy, that Apple Operations International, which has never filed a tax return as far as we know. That's what's going on. So at least the European Union has attempted to take an enforcement action, even if the US hasn't. But we got another policy development as well. The OECD said, you know what, we're sick and tired of all these multinationals playing us all for chumps. None of us know where they pay taxes. We don't know where they make profits. We don't know where they do business. I was stunned to find that out, that no one in the world knew where a multinational was assessed taxes or paid taxes on a country-by-country basis. You only get where they choose to tell you in their SEC filings or their other public filings. So the OEC got together, including the United States, and they said, we're going to change this. And they required all of their member countries to say, from now on, every multinational that makes at least $750 million in revenue per year, so we're talking the very biggest guys, are going to have to file a return with their tax authorities with some basic information. How many employees you got on a per country basis? What kind of facilities do you have? Do you have a profit or do you have a loss in each country? Are you assessed taxes? How much taxes do you actually pay on a country by country basis? New information. First ones were just filed in 2018 on 2017 revenues. First time ever our tax authorities are getting some information about these multinationals. And of course, information is power. You can't take any steps till you know what's happening. Now the problem with that stuff, only the tax authorities see it. No policymaker in Congress, nobody like me who's a staffer, no investigator, no academic, nobody in the public gets to know just yet. But I figure get them start to file the reports and then we can try to make them public, and that is actually happening in Europe right now. They're trying to get that information public. So again, we had a series of 3 hearings and it led to that policy development. So that's my story. And I think I have great respect for Senator Levin. He's 85 now. He went home to his hometown, Detroit, in Michigan. We set up a nonprofit for him there called the Levin Center at Wayne Law. It's at Wayne State University Law School. And its focus is to try to improve the quality of oversight investigations in Congress, on the state level, and internationally. So that's what I spend a lot of my time doing. But what I hope I proved to you that his investigations found important new facts. He was able to do it on a bipartisan basis, and he was able to drive a number of reforms. You can dispute some of those reforms, whether they're overall good or bad, but he certainly made a difference in terms of transparency and trying to strengthen anti-money laundering controls and try to stop some of the tax dodging that our multinationals are engaged in. So I think we have quite a bit of time for questions, and I'm happy to answer them. Yeah. Oh, sorry about that.
Hi, good afternoon. My name's Brad Birkenfeld, and thank you for giving me the credit for coming to your committee. I was the whistleblower that exposed the largest and longest running tax fraud in the world, and I did write a book as well, like yourself, so I appreciate that. But I think I'd be remiss if I didn't share with you and your audience here some facts that you've left out. Very, very troubling facts, and they're quite extensive. The first and foremost is...
Please make it a question, not a whole long statement.
Well, I have to give you a few because you're
obviously
unaware of exactly what your committee didn't do. First and foremost, you were lied by the DOJ in front of your committee and Senator Levin. That's the first thing. Second thing is, you never called me to testify in public, but you had my boss, Martin Nischke, come and testify. But he had a secret non-prosecution agreement, and he pled the Fifth, and you let him go back to Switzerland, which is a felony. He deceived Congress. That's a felony. Second, Senator Obama was an active member on your committee, but never showed up for any of these hearings where UBS was under a criminal investigation. At the same time, he was running for president, so I can understand that. But he was accepting millions of dollars from UBS Americas from Robert Wolf, bundled campaign contributions from the same bank he should have been investigating on your committee. So this is very troubling. Furthermore, the very fact that they got a $780 million fine does not jibe with the deferred prosecution agreement where they made $200 million a year. Over an 8-year period, that's $1.6 billion. So you're off $1 billion right there. That's the Department of Justice, once again, the people who lied to you.
Do you have a question?
Yeah, I do have a question, is why didn't you talk about some of these facts that are so blatant, and the very fact that in that committee, I still do not have my testimony from your committee. You refused to give it to me, which would exonerate me, number one, because I did give up my biggest client, Igor Lenikov, And Bob Roach, your colleague, knows this. I gave it to him in emails I can show you. So why didn't he correct the record is my question, and why did you let Martin Lichty go back to Switzerland, a free man, who is the ringleader of this operation, and I gave you all that information? Those are my questions.
All right, so I can't answer all of those, but I'll say a couple things. Mr. Lichty was not under our control. He was under the Department of Justice. They allowed him to come to our hearing. He took the Fifth Amendment, even though he's not a U.S. citizen. And so we decided to respect that right not to self-incriminate. The Department of Justice
he had a secret non-prosecution
allowed
agreement.
him to go back to Switzerland.
Yes, but they lied to your committee.
I mean, one of your problems from the very beginning is you think the Department of Justice and Congress have free communication between them. They do not.
I didn't say that.
They do not. They never told us about that secret agreement. I don't even know if that's
Well,
a
maybe you
fact.
should reopen the investigation then.
You know, I left out a lot of things that I'm very troubled about your conduct. I don't consider you a whistleblower.
Well,
I consider you a disgruntled employee who tried to get his employer.
Yeah, I got
That's what I think went on.
Well, the IRS
You smuggled
considers me.
diamonds and toothpaste. You
really?
engaged in a lot of money.
You were happy to take the testimony when I was in your office.
You do not have clean hands.
Oh,
Do not. Okay.
Well, she's pushing back. Hey, excuse me. Well, I want to make sure the facts are clear here. Well, no, it's not. You haven't got it. Yeah, okay. So anyways, I am a whistleblower, and the IRS recognized me as a whistleblower. So there. I have 104 million reasons why I'm right. Thank you.
Okay. Any other questions? As you can tell, doing these investigations is not always an easy situation. Very complicated facts, and we do the best we can. I think we handled the UBS case very well.
This is Lad Brown. Where do you see the next, even though you're stepped away, but where do you see the next level of investigations going or hoping to continue to go on in this whole area?
Well, there aren't that many people that do anti-money laundering investigations because there's not any electoral, it doesn't help in your elections. Senator Levin never cared about that. He thought it was an important area, and so he did it because he cared about the issues himself. There are investigations going on now in the House. One of the ones that they're doing is looking at Deutsche Bank. They're looking at the Russian mirror trades that went on. They're looking at the money from Danske Bank in Estonia, $150 billion, went through Deutsche Bank in the United States, trying to understand that kind of transaction. So there are investigations still going on. This is now through the House Financial Services Committee. There's some other people who care about these issues, but they're not in the majority in the Senate. Senator Whitehouse is somebody who really cares about this kind of stuff. Senator Wyden does too. One of the bright spots is that we have legislation with respect to beneficial ownership. Senator Levin, with Senator Obama and Senator Coleman, introduced a bill back in 2007 to try to force the United States to identify the beneficial owners behind the corporations that they formed here in the United States. Here it is more than 10 years later. We don't have that legislation, but supposedly a bill is going to come up for markup in the next couple weeks in the House, and we are hopeful that we'll make some progress on corporate transparency. Yes?
Round out the Bank of New York story a bit. My understanding was that the bank was actually able to get away without admitting any wrongdoing. And a couple of one vice president that I can think of went down. But there was at least one lawsuit that I can recall that was brought against the bank on behalf of injured shareholders that was dismissed on the grounds that because the bank didn't suffer any damage to its bottom line, there was no wrongdoing. Could you elaborate on that a little bit?
So we didn't investigate the Bank of New York ourselves. There was a prosecution of them. As I understand it, there was this particular couple that led the effort to get money from East European banks to go through Bank of New York and then off in other ways that were suspicious transactions. The estimate was that $7 billion of suspicious transactions went through Bank of New York. At the time, it was a complete shock, surprise scandal. Nobody had ever even heard of correspondent banking. Nobody knew what that was. So really what we did is once that we saw that happen, Senator Levin said, investigate correspondent banking, find examples of correspondent banks that have opened up accounts at U.S. banks. what are they doing with those accounts? So we didn't actually investigate Bank of New York itself.
Just to add a footnote to the Bank of New York case, there was the business of the Republic of Nauru, which had, I believe it was some 600 banks whose main address was a shack on the beach in Nauru. And indeed, there was a picture of the shack on the front page of the New York Times Magazine. This all came about because there was a crook who went by the name of Schneider who went around selling banks to people who wanted to evade taxes. He sold a bank to a Russian, a single Russian, for $70,000. The Russian very quickly discovered that he wasn't paying but $5,000 to the people on Nauru. So he decided, or I should say the Russians decided, to go directly to Nauru, and they just opened one bank account after another. And the bank was wherever the portable computer with the disk that had the correspondent banking information for Bank of New York, it was located wherever that computer happened to be.
I remember all of that, and Nauru, nobody knew how many banks they had created. We tried to find out from Nauru, and they claimed that they didn't know. People were saying 2,000 banks, but nobody really knew how many banks they created. And once we got that shell company ban, and FATF made it worldwide, Nauru essentially stopped doing that. So we don't have those kinds of proliferation of shell banks now because they can't open up accounts.
One more footnote to the Nauru situation. They operated through Washington, D.C., where they had a lawyer and an accountant and a group of people who were actually the ones who were selling the licenses, and they weren't forwarding all of the money to the people in Nauru. And in addition, they were selling passports from Nauru. And I happen to have been involved in trying to get the government to prosecute the people who were acting as agents for defrauding Nauru and for involvement in the passport scheme.
Jack Blum needs to write his own book. He has seen so many interesting, amazing cases that I'd love to hear a presentation by you.
The Department of Justice just said, no, this is too much of a mess for us, we can't do it. And that was the end of that, but it would have been a very delicious public prosecution.
One of the things we did by doing our investigations, they were for policy purposes, but we would spend an entire year gathering facts. And if the Justice Department asked us for them, we had an official Senate resolution allowing us to share non-public information with governments, both U.S. and foreign. So if they'd come and ask us, we'd tie it up in a bow and give it to them, and sometimes they did and sometimes they didn't.
Hi, Lucy Commissar. How many bankers, in all of these cases, how many bankers and others went to jail, and how many banks were, particularly how banks had their top people go to jail and certainly also be removed from their positions?
Hardly any. We do have Simon Carreri, who was that one banker from Riggs Bank. He and his wife both went to jail. But, I mean, you're talking for him $1 million, $2 million, but all, like Amy Elliott, who helped move $90 million for Raul Salinas, never went to jail, was never indicted.
Why does the Justice Department decline to indict all these people?
Well, there's an entire book that's been written about that. It's very, very good. I apologize for the title, The Chicken Shit Club, by Jesse Eisinger, and he does a very sophisticated analysis about how Department of Justice people are risk averse, they're afraid to lose cases, and some of them want to go work for law firms that are defending some of these people. And there's a whole complicated series of reasons that I don't find acceptable about why we have not prosecuted bankers in recent years. We used to. We had the S&L crisis and other kinds of things. We put a lot of bankers in jail, but that financial crisis, same thing. Very few have gone to jail, and I think that is a terrible message.
So is that the Obama legacy?
It's certainly part of the Obama legacy.
Too big to jail?
I mean, they wanted to go, the prosecutors had advised going after HSBC to indict the bank itself. The regulators all signed off on it, but then the UK's FSA came and made a plea to Eric Holder, the Attorney General, and said it's going to cause so much financial disruption, you shouldn't indict. And Holder made that decision. They did a deferred prosecution agreement instead. To me, it's the wrong course of action, but that is an Obama legacy. Yes, it is.
Another footnote or two in this. And the HSBC hired the person at Treasury who was in charge of this
Oh, FinCEN,
whole business as their chief of compliance. A matter which I thought was
And you have a
bit
former Treasury
outrageous.
official as their general counsel as well. so.
But then the question of why there was not a prosecution. The real difficulty in all of these cases comes down to the trial. And how do you handle a trial that has as evidence millions of documents, lots of witnesses from all over the world, and how do you present that to a jury, which is a constitutional right?
And diffuse responsibility within a bank. You know, is
Yeah.
it the banker online, their supervisor,
Yeah.
their mid-level, the upper people who say they didn't know anything about it?
Right.
Very
Well,
difficult
but
to
let's
try to
assume-
convict somebody.
Let's assume there's even a direct line, and you have some proof that the top management knew. And in some of these cases, it had to be that they knew because there was so much money involved. But the line prosecutors have the difficulty of how do you bring a case that has 1 million documents and 150, 200 witnesses from all over the world, 20 of whom don't speak English,
Yep.
and keep a jury attentive and get a conviction.
It's
And
another
this
set of
is-
problems.
We're working with an 18th century British antique criminal legal system that simply cannot handle this kind of case. And that is something that we have to really think through and come up with some solution for, because so many of the people who should have gone to jail have gotten away with it because the cases are too damn complicated.
Well, I want to thank everybody here for listening to this long presentation. I hope it gave you some better idea of where FATCA came from, where the PATRIOT Act came from, and some of the other laws and requirements. So thank you very much.